start recording. All right, perfect. Now I'm recording. This is the Wednesday webinar with MotiveWave. It is April 13th, 9 a.m. I am Todd Gordon of tradinganalysis.com, and we do this every Wednesday, and we like to cover a different topic, talk about the markets, put it within the, do that with this great tool that is MotiveWave, the software we're using here right now. I got to be honest with you here. I have a few ideas on the energy markets. We put some new trades on there, but I'm pretty light right now. I'm a little bit at a standstill with the indexes. Don't have a strong feeling here in the indexes because these guys are sideways. I have a feeling we're in this fourth wave in the S&P. I have a couple different options on the table. Could be a flat, could be a triangle, but it is sideways. So that's where I'm at right now. I'd like to take some questions, some comments, any insults you guys have, and any topics you guys want me to cover, and I will do that. But like I said, we can focus on the corrections that are going on right now in the market, and I think that's kind of the deal. So if that's all right, let me just kind of get some feedback, see what direction you guys want to go, and I'm going to let you go a little free form today if that's okay. Hey Norman, good morning. Wave 3 in gold already over a bit short. Is it okay? Perfect. Let's dive into gold. I love doing this Wednesday webinar with you guys. You guys are so interactive, and you guys tell me what you want to focus on, which is great. So, my members at Trading Analysis, they hear me talk 10, 15, 20 minutes every single day with the members video updates and all the stuff that we do and the trade desk updates. So I love doing these webinars to kind of get feedback from you guys to know what you want to focus on. All right, gold. Crude's coming back off the lows here a little bit this morning. So 1248, we are long gold. We booked profits on gold 2 days ago. I have a long-term 120, 130 call spread in GLD in my long-term accounts. But we did just book profits, max profits on what did we do? We opened this trade in March. We did a 115, 120 call debit spread, and we bought it for 220, sold it for 312. So where are we in gold? We are flat in gold. What is our ideal? What's the count we're working? That looks a little weird right there. Why does that look so strange? Okay, that's all right. So here's what I think we're doing here in the gold market. I do think we're pulling back in this little wave 4. Norman says wave 3 in gold. Norman, are you talking this little black or this little red, dark red, Roman numeral 3, and then up, down in 4? Is that the one you're talking about? This is what I think we're doing in the gold market. Let me just get this a little cleaned up. I got to update this count a little bit. That's okay. So 1618, that is a textbook relationship of a first wave against a third wave when you get a 1.618. So that's perfect. Then we'll go to work looking at wave 4v2 right here. So what we're doing is distance traveled in 2 compared to distance traveled in 4, and so far it's exact. And then the next step we can do is a retracement in wave 4 compared to wave 3. And that's the 2 steps that we take every single time to get your wave 4 support zone. So that's pretty good right there. We actually have a 4v3, those 2 fib support levels sandwiching the 4v2. So that's pretty good right there. Let's just do a little time analysis. Wow, look how symmetrical that is. That's awesome. So basically what this is saying is wave 4, this 4 was equal to the distance traveled in 2 at 1243 in price, and the time traveled in 2 was exactly equal to the time traveled in 4. So that doesn't get much more symmetrical than that. That's kind of fun. Might be time to get back into gold. Might be time to get back into gold. I got to think about that. And gold is coming off the lows there. So here's the risk in a fourth wave, and I'm going to get a little Elliott Wave-ish with you guys. Usually your fourth wave is longer in time than your second wave. A nice target is the 1.618, 200, and 2.618 time relationship. So that brings into this scenario into the fold that we could just be doing an A wave down and we're going to have a B wave bounce. And then we'll do another C wave push just to kind of draw out the fourth wave. So that's fine. So if we're long, we got to be careful we don't get caught in a false break in B, stop, run down in C, and then it goes. That's my one little cause for concern. Okay, so that's gold, Norman. Let me know if that helps. James, may you please review the oil sector like UCO? I don't know UCO, James. USO, the ETF? David, what about the dollar's relationship to the market? Yeah, good question there. The dollar, we are short the dollar, and we're short a 25-23 put spread in UUP. Dollar is kind of cuddling up into some support. I'm nervously short the dollar. I think the rate hike expectations, where the hell's the dollar, are being pared back. Where's my DX? I'm going blind. Oh, it's right in front of me. The rate hike expectations are being pared back here a little bit, and I think that's starting to, that's being reflected in this lower dollar move. But the longer term count in the dollar is big time sideways, but starting to press the lower end of the range. I'm playing for this little push down here in the dollar before we eventually regain our footing. The Fed finally decides to man up, or in Janet's case, woman up, and rally up in wave 5. So the dollar's pretty sloppy in here, Martin. As we get down to the 195 minute, it's really starting to look like an ending diagonal here, or sorry, a leading diagonal. So it'd be a, this kind of shape. Yes. So I am almost ready to bail on this trade. We made a little bit of money on the short dollar position, get out, because we should have a B wave rally up. That is going to hurt the commodities a little bit, and that's why I'm a little nervous about long gold, long crude, because I do have concerns of a B wave rally coming up in the dollar. Dave again says, isn't that directing oil, gold in the market, the dollar? Well, let's take a look at that. Let's test that. Let's test that theory. And I haven't done this in a while. Let's just take a 39-minute chart. And let me do this over here. Let's go intermarket analysis. This might be a good time to do this. Okay. So here's an intermarket analysis, and I call this chart the 5 generals. These are the major macro markets. ES is your S&P futures. Hey, Tony, I didn't know you could do that now. That's pretty cool. Look at that. Huh, cool. Nice feature there. So ES is the S&P futures. US is your 30-year bond futures. Gold, crude. This is the, dollar, crude, and we're missing, I can't talk today. S&P, bonds, dollar, gold. We're missing crude. I will overlay crude. So this is kind of like putting a puzzle together. The black is the S&P. So what I'll do is just pull one market up and just see how it fits on top of the S&P. It's not a very scientific way of doing things, but it kind of works. This is going to be gold. So you can see that gold and the S&P have a pretty good inverse relationship. So I'm fine with that. Here's the bond market. Also, they kind of traded together here, but then we've just fallen into an inverse relationship with bonds and stocks. So not a real surprise there. Let's take a look at the dollar. Yeah, no relationship there with the dollar. In fact, let me do this. Let me invert the dollar, basically make it the euro, and see how it fits on top of. So that is going to confirm. So what I did, guys, is I just took that dollar, flipped it upside down, made it basically euro dollar, and you're seeing the dollar's trading inverse to the stock market right now. So I'm going to unflip it, put it right side up, and dollar's going inverse. Okay. And it's a little tricky. These things tend to jump around a little bit. Gold and the dollar right there, obviously inverse, and then we could add the crude oil market in, and that's the last little intermarket analysis I'm going to do, and just see what it looks like there. So we're going to add study, instrument overlay. It's going to be at QM pound. And let's make it a different color. Let's go red. So this is like the puzzles my 2-year-olds play with, you know, just kind of fitting the blocks on top of each other and try to fit the square peg in the square hole and just see what works. So let me just kind of push you out of the way. So this is crude and stocks. Black and red is crude and stocks. Not bad. Not bad at all, actually. Neither have really made a new high. QM has not made a new high. S&P futures have really not made a new high yet. So there's a little bit of consolidation right now. That kind of makes sense. So dollar is trading inverse of stocks. Crude's trading with stocks. Bonds are trading inverse of stocks. Gold and bonds are trading together. And that's kind of a typical macro relationship. So I just use these relationships basically with those little observations we just made. I take those observations and then go back over to the Elliott Wave charts. And when you have agreeing or confirming wave counts on those macro markets, then your ability to do single chart analysis increases with kind of an understanding of what's going on there. All right, so hopefully that wasn't too confusing. Netflix, sure, Chris, let's take a look there. Netflix, I hate Netflix. It's just, he's just always on the, it seems like he's always on the opposite side of the market. Anytime stocks are up, Netflix is down. Netflix is down, stocks are up, blah, blah, blah. Nice little bid up there yesterday. I missed that one. Netflix, I just haven't been trading Netflix very well. I'm not even really tracking a wave count on Netflix. It's just been such a choppy, sloppy recovery back. I don't have a huge degree of confidence in Netflix. We're at the 618 off the high. We are at the 707 off an intermediary high. Don't have a huge opinion on Netflix. Plus, I think I'm like 0 for the last 2 or 3 trades in Netflix. So I'm not a good go-to on Netflix, Chris. Silver, haven't checked him in a while. What is my silver? Where is it? Should be right. No, I always get mixed up with silver and natural gas because they're so similar quotes. Where is my silver? Maybe I don't have silver. I had it. We'll have to come back to it. Probably right in front of me. I'm just not seeing it. I can take a look at SLV for you, though. Let me go down to Stock Watch. SLV. Stock Search. Silver. Silver looks pretty good, right? Looks like it's kind of forming that low in the weekly, set to move higher. Wow, that looks pretty good there. Through 15.5. I like silver. Looks like that guy can move higher. And if stocks are going to continue to move higher, I like that play. Yep, silver looks good. I like him. Mike says, could you show us the Elliott Wave label from the 80s till now? I'd like to know which phrase we're in. Sure. On what, Mike? And I'm sorry, I'm going to have to scroll down. I hope you mean the S&P. Mike, I'm scrolling down on the questions. SPX. Okay, got it. Yep. I think I have it over here in the members area. Chart room. I believe I do. Let me see how far back. Nah, that one goes back to 2012. Okay. All right. SPX. All right, so here's where I think we are longer term in the S&P, back to the 80s for you. This is a log scale, Mike. Real important when you're doing longer term analysis like this. You know, a move in the S&P from 200 to 400, obviously that's a 100% move. That's significant. That'd be the same as the S&P going from 1,000 to 2,000. So that's a pretty big move. So you got to set semi-log up there, and that's going to change everything. Basically, how far back are they going to give me? Back to the 1950s. Okay, so post NASDAQ or post NASDAQ, post 1929 crash, that is a big second wave. The 1940s, 1930s to 40s lows, that began a third wave. The third wave will end once this wave 5 completes. So the 1929 crash was wave 2. The rally from the 29 crash up to here will be a third wave. Then we'll go into a deep fourth wave, you know, the mid 2020s, I think, maybe out to 2030. But for the near term, here's where I think the S&P goes above 3,000. So that'll complete a higher degree third wave. Then we got to go down, do another credit crash. Maybe the bond bubble finally comes off. Usually go back and target the area of the prior 4. So that'll be a pretty spectacular move lower. But I think we're several years away from that for now. So that's where I think we are. Dan, could you show us how to use time ratios on TOS? Well, this is a MotiveWave webinar, Dan, so I think we'll stick with MotiveWave, but maybe another time. It seems like all the news is bad, like this morning's PPI in retail, yet market screams higher. Randy, up. Is it all due to continued expected backing by the Fed? Randy, a very complex answer to your question is yes, because it seems like all the news is bad in this morning's PPI retail sales, yet makes the market scream higher. Is this all due to continued expected backing by the Fed, i.e. no rate hikes in QE? Yes, Randy, I don't even watch fundamental news anymore. I really don't. It doesn't move markets. Good news, the market goes up. Bad news, the Fed is still going to be there and going to keep interest rates at 0 for probably your and my collective working futures. So I don't even watch data anymore. Hey, Ron, CMG, sure. Haven't looked at CMG in a while. Where is CMG? Sell watch? There it is. Oh, I don't want to be loading a monthly chart there. I'm not really keeping up on CMG as I should be. Hold on, let me get out of this. Oh, don't crash on me. Okay. Okay. So here's where I am on CMG. A lot of wave 4 resistance up there. Boy, that looks messy. I was looking for a wave 4 top here, and it wound up being there. So actually, wow, that would have been a good sell. I kind of forgot about CMG for a while. I think we're in a wave 5 lower. So I was looking for a top there. We went a little bit higher. Now we're a lot lower. Wow, CMG's gotten wrecked lately, huh? Forgot about that stock. Yeah, it looks pretty good. If you break the 786 of this wave 4, it's probably going to the 1272. So you can do that like this. Just do a 4v5 comparison. 5v4. If you break 786, which is going to be at 426 bucks, then if you break 426, then you're likely going back down here to 367. That looks like a pretty good short. Thanks for bringing that to my attention. I forgot about that guy. Tough to be short down into the 786, especially because it looks like we have 5 waves down. But if the stock market rolls over, we could get down to the 426, just catch a little on the downside, but eventually we should move lower in wave 5. Donji, on gold, why do you label your brown wave 1, which looks like a zigzag? Okay, let me go back. Gold, GC right there. Okay, brown wave 1, which looks like a zigzag. Yeah, no, I agree with you there. This does look like a 3, and I do have a problem with that. I absolutely do. But you know what? It's really not it's inconsequential because this could be a truncated move right down here, right? And the wave started here, 1, 2. So it really doesn't change anything. But good question there. That does look like a 3, and that's probably more appropriate. So maybe the wave, this red 4 would have ended here in a truncation. It does look like a 3, but it could be a truncated situation right there. John, I absolutely do use the rule of alternation. It's not a rule, it's a guideline. It's not a law, John, it's a guideline. So if one's a flat, the other one's a zigzag. So sure. Yep. Hey Ramesh, good morning. Speaking of gold, hearing different expert commentary. Who do we call expert commentary? That's funny. Which has the biggest MO, whether gold or miners? Not sure there what you mean. Sector rotation time, possibly, Bill. Win in short term, long term, short. Let's take a look at win. Where is win? Win. Probably in my cell group. Probably. Buy group. Okay, win. Yeah, China's come back, so win is going to do all right there. Looks decent there. Let's see. 1, 2, 3. 1, 2. Coming off the lows, 1, 2. We're going to end in. This is kind of tricky up here. That's probably going to be an ending diagonal. Can't buy win now. It's kind of tough. No, that's not going to work there. Because you've got overlap. That is not going to work there. 1, 2. Kind of ugly. Don't love it. Yeah, I don't really see an edge and win there. 3. Yep. Don't love win there. Not much I can do there. Is the inverse dollar due to market multinational deriving revenue from overseas sales? No, Bill. You're way overthinking that one. Is the dollar's inverse to market due to multinational companies deriving revenue from overseas sales? No. The more the Fed chickens out from raising rates, the weaker the dollar gets because we're losing our interest rate differential advantage. So the more the Fed puts off hiking rates, the better stocks do. So as a weaker dollar is reflecting the Fed's chickenness, and that's going to push stocks higher. That's all. Disney, no, Sandy. I looked at Disney last night and didn't love anything. Earnings coming up on Netflix, cool. JWM, Michelle, sure. Let's see. I don't think I have that in Stock Watch. I know this guy was moving quite a bit. Yeah, that looks pretty good there. So that's going to be 1, 2, little zigzag up, and then we're going to do 1, A, B, C, and 2. Actually, 1, 2, 1, 2, 3, 4, 3, 4. So it's going to be. Always got to make sure wave 3 breaks down into 5 waves. That is not correct. 1, 2. We'll call that a kind of a goofy looking flat. Actually, you know what? We'll do this. And I hate to do this, the Elliott Wave stuff live for you. I know a lot of you are like, what are you talking about? Because it is pretty subjective. 1, 2, 3. That's pretty sloppy right there. It's fine. Whatever. Up in 4. So wave 4 finds the area of the prior fourth and start to move lower. Same concept. If wave 4 breaks, or wave 5 breaks the 786, then we should get down to the 1272. Right now we're at the 618 relationship. So JWN actually like the looks of that one. That's pretty good for now. I would like to get a fourth wave rally. It could be anything, flat triangle, complex, whatever. Similar in price and time to this. And then we should be able to drop down to the 1272, which is in this zone right down here. So that actually looks pretty good. I like that. Trevor, can you explain the wave count? Can you explain how the wave count in a lower time frame relates to a higher time frame and how you use information for trades? Trevor, that you always ask me, brother, the questions that are 20-minute, that's a whole webinar. I'd have to cover that one. That's a pretty big topic. But I'd love to. Let's save it for member webinar on Tuesday if that's okay. But I like it. How do you trade with Elliott Wave is basically what you're asking me. All the patterns we look at are fractal, meaning the small time frames would look similar to the larger time frame. So it doesn't matter what time frame you choose to trade. It's all about how much risk you want to take in your account. You can trade a 5-minute based on these patterns or a daily based on these patterns, but how long do you want your trades to last? And that's generally the question you have to answer. We like to trade 3-hour charts. So, generally we're going to trade for a week or 2 weeks. Trevor, what's the best time to switch to a log scale daily and above? Wow, like the Twilight Zone. I don't know what that means. How accurate do you feel MotiveWave is with time analysis? Good, a lot. I mean, time is time, right? Todd, Apple looks short from 1125. Hey, Alex. Yeah, Apple is in a D-wave rally around the 111. Really interested to see what happens here in Apple. I have us in a big old triangle, A, B, C, D. We're at a 618 relationship of B wave compared to D wave. We're at a 61% retracement of C wave into D wave. 200-day moving average is coming down. So 111 is big in Apple. We'll see what happens. If it breaks, that's going to be interesting on the top side. Sergio, CHK short. I'll put him in the buy watch. CHK. And that's probably a good time. Let me just show you the APA trade that we put on yesterday. I did that live with clients. Energy looks pretty good on the top side. Yep, looks pretty good there. Nice little ABC pullback in CHK. Let me just show you the APA trade, and then we'll finish it there. So we're down just 0.5% there on the open. Okay, no worries. Daily. So here's what we're looking at in Apache. We did a out of the money call debit spread to get up into this wave 3 of 5 zone. We put on the 54.56 call debit spread, 54.56 out in the April 4s. So we put that trade on, just looking to get up into this out of the money zone right there. Okay, that's the wave 3 up top. All right, guys, I hit a lot of questions. Those of you who are not members and would like to take a trial to trading analysis so you can get all this kind of commentary in real time, I've got a discounted link for you. If you would like to become a trial member for 30 days, if you just go to tradinganalysis.com/motivate, that will give you a discount on the 30-day trial. So motivate for MotiveWave. So tradinganalysis.com/motivate, and that'll give you a 30-day trial for $7. You'll get all SMS alerts when we make a trade. You get the daily video. You get the members chart room, members resource page, members webinars, etc. So normally it's $47 off the website, but come in a little discount here for you guys. It is $7. And again, you can find us at tradinganalysis.com right here. And we are a full service trade research and trade alert provider. We keep track of all the positions that we have in real time. As I make a trade, I update it. We're not a company that just recommends a bunch of trades and just leaves you out there. We keep very good records of all of our positions. The chart room with all the markets that we're following on multiple time frames done in MotiveWave software. Daily video, it's 10, 15, 20-minute video. I break down, what markets I talk about at what time if you want to kind of skip forward to the market you care about. So that is a pretty good offer for you guys. If you are not ready to take a trial, just be sure to get on our email list. We'll send you out our daily videos. I do some fun YouTube stuff and kind of mess around, have a good time. This one yesterday, I did one flying a drone around outside of my house, so it was kind of fun. Just talking about this APA energy trade. I was just set up my laptop out and just kind of did a video out on the deck. So just kind of had some fun. So if you guys want to check out that video, I'll drop that link in there for you. Send to all. There's the link. I just dropped it in chat for you. All right. So I hope that helps, guys. I try to answer as many questions as I could, and we'll leave it there. And now we'll see you guys next Wednesday. Have a great one. Thanks.